So there is a housing crisis in the United States. You may have seen stories about this. There's an affordability problem in the housing market, and there is just not enough homes on the market to satisfy all the demands. Even forgetting about the affordability, there's just not enough homes. So over the depending on what estimates you're looking at, we're short 3 or 4 million homes in the United States to really kind of fulfill everybody's demand. That is a combination of multifamily units, single family units, affordable housing units, every different type. So it's not one or the other. We're going to dive into that in a minute and what stocks we're looking at that we think could kind of lead the charge and help solve the problem and benefit investors at the same time. Before we do, take a minute, click subscribe, and check out the message you see on your screen from our sponsor, The Motley Fool. You get the top 10 stocks to buy right now, and it's the best way to support this work we're doing on YouTube. So Tyler Crowe is joining me. He's going to be talking about one of the stocks that he thinks is going to be a big beneficiary of the solution to the housing crisis, but I'm going to go first with one. I am looking at Walker and Dunlop. Ticker symbol is WD. If you're a regular watcher of my YouTube channel, you've probably seen my Willie Walker interview. The CEO was on here not that long ago. Check it out if you want to. But generally, they are a commercial real estate finance company. They specialize in multifamily housing. They have a lending business. They have a mortgage servicing business. They have a sales business, kind of like the equivalent of a realtor for commercial properties. They have an investment banking unit, and they have an appraisal business. They aim to be kind of a one-stop shop for commercial real estate finance. Like I said, they are focused on multifamily. Multifamily lending is a very fragmented space. Walker & Dunlop is one of the leaders. They are the number one Fannie Mae multifamily lender. They're in the top 5 in Freddie Mac and HUD multifamily lending, and they have less than an 8% market share. So this is a very fragmented market that has a lot of room for, growing share in just one large player, whether organically or through acquisition or a combination of the two. There's a few reasons I think Walker & Dunlop has a particularly interesting opportunity. One is that they made a big investment in affordable housing and couldn't have timed it better. They acquired real estate investment bank Alliant Capital during the pandemic, and it's already making up about 10% of the company's revenue. And I think there's a lot of ways that they can take that business and really kind of a lot of ways that they can combine that with their existing business lines to really help solve the affordable housing problem and make money at the same time. In their core business, there's not only going to be a lot more properties changing hands as rates fall, which they're expected to do over the next year or two, but there's a lot of refinancing opportunity as well. When I interviewed Willie Walker, this was one of the big kind of statistics that stood out to me. In the next 3 years, starting in 2024, there is $356 billion of multifamily loans set to mature that will need to be refinanced, or the properties will need to be sold. That is roughly 3 times as much as matured in the 3-year period from 2020 to 2022. So a big ramp up. A lot of multifamily owners got new loans when rates were really low, and now they're going to start coming due. So that's going to be a big refinancing opportunity for their lending business. I already mentioned the investment banking business that's focused on affordable housing. Appraisals are a big, big opportunity. The company just started its appraisal business from scratch in 2020. It's already over $10 million in annualized revenue, and they think that's going to continue to scale rapidly and become a real significant revenue driver. And they think it can hit $100 million in high margin revenue by 2025. Willie Walker also mentioned the small balance lending opportunity. I looked into that a little bit more, and that is an area that's really underserved by traditional lenders. Small business multifamily small balance multifamily lending would be, say, if Tyler wanted to go buy a 6-unit apartment building. Where would you go get a loan for that? At the very least, it would take quite a bit of research. So there's a large opportunity there, and there's a big opportunity beyond multifamily. They've already started to diversify a little bit, but they have less than a 2% share of non-multifamily lending. So a lot of room to grow there. Multifamily is by far the biggest part of my thesis. I think there's a lot of different ways they can still grow that business to several times its current size. And that's one stock that I am doubling down on as we go into 2024. Tyler, what are you looking at?
So you went with multifamily. I'm going to go with single family housing because I think that the shortage of single family housing is even more acute than it is in the multifamily industry. Mostly because, just let's face it, people want homes. That's just kind of how it is. And the structural deficit that we've built up over the throughout the 2010s and into early COVID to like 2020 and 2021 is profound. The amount of houses that we need relative to what is actually available on the market today is well short. I've heard numbers sometimes, as low as 1 million short and as high as 3 to 4 million short in terms of single family homes needed. And so there is a structural advantage for a lot for single family home building, so much so, like I've mentioned this one to Matt offline a couple times, is like your dumbest friend could run a home builder right now and probably make money because it is such a lucrative business right now and probably will be for the next few years. Most home builders with a pulse today are posting record profit margins, record returns on capital. Maybe sales themselves are not as robust as they were, let's say like 2021, as like everybody was rushing to get homes in the COVID period. But at the same time, there is such a low amount of homes for sale, like existing homes, that new homes are pretty much I wouldn't say the only game in town, but they have become a record component of sales in the United States. They had gone from below double-digit percentage of total homes sold to, in some markets in the United States now, new homes represent over 50% of sales. So it's an incredibly lucrative market, and for the next several years, it's going to have its ups and downs, just like any cyclical market, but that structural component of it is going to last for a very long time. I have mentioned probably Green Brick Partners a couple times as one that I own personally, and I like. I think they're really good underwriters. But the one I wanted to focus on today specifically was Meritage Homes. Another home builder focuses a lot in the entry level component of home building. So lower price points, a little bit more cookie cutter, not doing a lot of customization, just basically like, we need to build homes, we need to get people in homes, and this is the fastest and most effective way for us to do it. And it was a pivot that they made a few years ago, and it's one that's worked out quite well for them. Over the past 12 months, they have a return on capital of 12%, which for home builders is absolutely stunning. And right now it has about a 19% debt to capital ratio, so it has a very good looking balance sheet. Its returns on capital are quite nice. Revenue growth has been a little bit lumpy, but it's picking back up, as we said, because of new homes kind of being the driving force of home sales in the United States as of late. And despite the gains that you've been seeing for home builders, Meritage Homes has been kind of one of the laggards, at least on a stock price basis, and still is pretty cheap. Right now, Meritage Homes trades for about 8 times earnings and 1.4 times book value, which, compared to a lot of other home builders out there, that's very much on the cheap side. You can find, I guess some of the lesser quality home builders may trade for cheap, but this is a company that has generated good, solid, consistent returns for some time and is one of the cheaper of those better home builders out there.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.